Why would the stock be that high when they obviously can't manage their own security?
That's a great question. Of course, now it's correcting for that inability to manage their product properly.
Why would anybody invest in a stock that doesn't reveal material? And why aren't some people actually being led away? That's material to the business, and they don't reveal it for 3 years? Are you kidding me?
Well, that's a cover-up.
I think we could call it that. But anyway, moving on, and Yahoo's got its problems, and they're going to get bigger, it looks like. This Fed hike, when you were looking at a quarter of a point, it's well telegraphed, it follows the markets. This is really dull stuff after last year when they led the markets. This time they're following the markets. No problem?
They're doing the right thing. However, I think what surprised the market was the fact that they announced that they may have 3 rate hikes in 2017 instead of 2. And furthermore, in the press conference, Janet Yellen said something to the effect that perhaps the labor market is too tight to handle the type of fiscal stimulus that Donald Trump has been speaking of.
Good Lord, what numbers is she looking at? A tight labor market. We've got more discouraged workers, people withdrawing from the workforce, one of history's lowest workforce participation rates. What is she looking at?
Well, the unemployment rate right now functions as fake news, you might say. I mean,
oh, no.
When you take into consideration underemployment, so much part-time employment, and a relatively low ratio of jobs to the working age population, you can't take that 4.6% seriously.
Is there any way to correlate three proposed interest rate hikes and create some value in the bond market or the stock market that you can then invest in? I mean, maybe we could do interest rate futures themselves in which you have more than a nominal value.
Suspension of belief, vivid imagination, that's what's required. Let's not forget that time and again, the FOMC has made these interest rate projections, and time and again, they fail to come true.
But, you know, the great thing is, when this happens, the chair of the Federal Reserve, when they fail in setting interest rate direction as well as rates, when they fail to properly understand the economic data, they immediately resign, or they're firing members of the FOMC who vote incorrectly as compared to the empirical evidence that results.
You don't do that in the U.S. government. No way. Come on, you know that.
I had just for a moment, I wanted to have that fantasy live for just a few
We could always
seconds.
privatize the Fed, I suppose.
Well, you know, that would have... Then we really would have too big to fail, wouldn't we? My gosh, maybe that's what the essence of this whole thing is. The Fed is so big, it must fail.
It has to continue.
We are looking at right now an economy in resurgence. The market today took a breather because of the interest rates hike. So goes the conventional reasoning. This market is anticipating great things from this president. It's remarkable.
You know, tax cuts in and of themselves, just cutting corporate income tax rates and deregulation can, in my mind, justify a 6 to 13% rise by the market from where it was on Election Day. And we're just over 6% now. We have further to go. This says nothing about the possibility that we will be looking at faster earnings growth going forward.
And it's interesting to look at the fact that the Trump plan will boost just one element of it, and it's a big element. Reducing the corporate rate to 15% will result in a 15 to 20% increase in earnings. Static.
There you go. Right. And that accounts for a good percentage of the recent jump you've seen in equity prices. And we're not even talking about less government regulation. That's going to reduce the cost that businesses currently pay. And that, too, would add to earnings automatically.
John, great to have you with us. Good times ahead, huh?
Well,
guaranteed, right?
You know, oddly enough, economists don't believe in that yet.
That's why
Consensus has increased their forecast for real GDP growth since the election by, guess what, 1/10 of a percentage point, from 2.2 to 2.3 for 2017.
You guys are so careful.
Yeah.
It's one of the reasons I really love you guys. John,
thanks so much. Okay.
John Lonski, great to have you here.